We do have similar looks.
I'm just not. I shaved the other day, so I'm not.
I've kind of just quit shaving.
Me
I'm
too.
going through a funk.
It's going to be summertime, and pretty soon it's going to get hot. So we're heading down to Miami next week. My daughter's spring break, so Key Biscayne. We're going to hang out at Key Biscayne next week.
I honestly can't get hairless enough to not be hot in Miami. The warmth there just can. As a native Minnesotan, I just can't take that kind of humidity heat combination.
Yeah.
Best
Yeah,
Buy
they really-
today got it. Minnesota needs the high school hockey tournament now more than ever. More
Oh yeah,
than
we got
ever.
the NC2A tournament coming up. That's so great. I'm so pumped about that.
That was a big game they had this week. That outdoor game, NHL game in the stadium in Ohio. I even watched that.
Hockey's kind of crushing all of a sudden. It's people watched it live for the first time ever. It was like a social media thing that people were talking about in real time. That's crazy for hockey.
Yeah, I think that's the first time I've ever watched almost a full hockey game.
If you get a good game, there's really few sports that are just better than just Ben's seen it. It's the Gophers and the Badgers would just go after each other. Like just insane college hockey is just a great sport to watch. Really, just a perfect speed.
Yeah.
You can follow it. You get hot goalies. You get the unbelievable passion. It's just cool stuff.
I mean, that was a good game on TV the other night. The one in the outdoor stadium. It was a good game. It was close. I think it was 4-3 final score or 5. They took the goalie out, and right away the other team, the Blue Jackets, put it right in the net when they tried to go full force at the end. Yeah, so you're going to beat up on Target again this morning, huh, Jeff?
They beat up on themselves. I'm just pointing it out.
It's been unbelievable. That stock's just been incredibly bad. I mean, the spread, if you've gone long Walmart versus Target, what have you made? You've made like 100% or something?
Oh, easily. Walmart over the last 52 weeks outperformed every single one of the Mag 7. And that was, didn't need this huge sell-off to do it either. They're just killing them. I've never seen kind of Target this unaware of its own being lostness. They just don't have any answers. That's a problem.
I mean, I'm looking at the dividend yield now. It's up almost 4%. Is that safe or is that at risk now?
It's all at risk because their margins keep sliding, and as long as your margins keep sliding, you're pretty much just screwed. It's a low margin business to begin with, and so they're not getting any traction where they need it. Yeah, they guided down for the whole year because February post Valentine's Day was weak. It's like, holy shit, if 2 bad weeks and your entire year in the crapper, you're just a little more delicate than I need my companies to be. Like, someone forgot to get the mail, so we're going chapter 11. It's like, what the hell is going on with this place? But On Holdings was amazing, Ben. Get your push-ups ready.
I saw a little bit. Yeah. I'm fucked there. That's for sure.
We're live, man. Just in case you.
Sorry. Look, it's an adult show.
So we're
it's
live.
an adult show. Hey, on a day like this where everything's getting trashed, this is an NC-17 show at this point.
Yeah, it's getting there. Holy crap.
I
don't have enough On Holding. There's not enough On Holding in the world to offset a day like this.
That's the thing that I like, to have like a list of things that get thrown out that are like, hey, we just had good fundamentals, and it's going to get sold with the market just because people are degrossing books and hedging and all this stuff. You have these mechanical flows, but then whenever that kind of plays through, those are usually good buys. And I'll give you an example of that. I tried to short Bros, as you know, Jeff, in January. And I got like 2 points on it when we were selling in January 13th and 12th, if you guys remember. And it just wasn't going down with the rest of the market. And I was like, I've seen enough of this. And somebody knows more than I do on this stock right here. And I got out of there. And next thing you know, it went to $82. I think I covered it at like 55. And you can sometimes see that where like, hey, it sells because everything's selling, but then whenever the market dynamics, whatever it's selling dynamics end, you get the stock to resume its pattern. So maybe ON's one of those ones that's a good one to take a peek at. Look, I'm buying this Google right here. I mean, at the 300-day moving average, I just feel like we'll see, but I'm so short that I feel like it's not a bad one. I love Google too. Like of all the Mag 7, by far my favorite stock.
It's just they've all got so many goddamn ways to win. Amazon's back to 200. You're seeing a lot of stuff that's just going right back to kind of.
I just covered my Amazon short this morning actually.
That makes sense.
I've been short almost all the Mag 7, and so covered Amazon, and I covered some Meta here. I just got mostly SPY and SPY puts, which is, there's enough Mag 7 in that at this point. Look. This might accelerate.
Are we kicking off here? Are we starting the show?
Are you getting a little
We're done talking about hockey. We might as well kick it off.
Yeah.
Okay. All right. That's fine. All right. Let's go. All right. So it is Taco Trump Tuesday, March 4th. I'm joined by two of my favorite guys, Bob Morris and Jeff Macke. So, of all the things we could talk about today, let's talk about Target, one of Jeff's near and dear topics. And, how's the consumer doing and how's Target holding up these days?
Target's never met the consumer. Target has no idea how the consumer is doing, which is really kind of what's wrong with Target because they're a discounter. So they sell discount product. They think the consumer is uncertain, and so that's just going to nail them. And you just want to scream, oh my God, if only there were a place consumers could go to get a fair price in a decent, clean store in a friendly environment, you dipshits. They're just lost. And so they're kind of comping negatively. Their margins are garbage and they don't have much of a plan to get out of it. They talk glowingly about their online growth, but their online growth is actually negative margin. And so it's like, why are you, that's your only growth story, is this business that loses you money every time someone orders something online and they take it in 5 days as opposed to Amazon's one? I don't know what the plan is. It just makes me sad, man. It's the hometown team. I want better for them. Best Buy is going to swing when Best Buy swings, but Target just can't show up and kind of be this mopey over and over again. They can't blame the consumer this often for being this weak. So, they did two red flags in one, which I found kind of an interesting conjunction there. They blamed an uncertain consumer and weather in the very same sentence for taking down the first quarter. What's that?
I said that's what retailers do. They love to blame the weather.
But holy crap, and to put them together like they would cancel out in some sort of mathematical equation type of way. It's like, holy, you just put both of those in there. It's if you can create no actual alpha as a company, but you're entirely beholden on the weather. I mean, I might as well buy a farm. There's all kinds of things. There's all kinds of different plays I can make on just acts of God, rather than just be long Target and hoping that they catch a fashion cycle and maybe the consumer somehow feels certain. Is that something declared? Is that like world peace? We're just waiting for world peace and then things are really going to be cooking. We just need that declared around the world. And then holy shit, man, we're going to hockey stick. It's going to be amazing. But they set a 5-year goal for 15 billion in revenue growth, which works out to like 2.6% a year. It's like,
that's not getting anyone excited.
That's a hard stock to pitch, man. I always like to just picture, okay, in the old days, if a broker's picking up the phone and he's trying to make his 20 cents a share, what's the story he's going to tell? And man, you're not going to sell a lot of stock if you're saying 2.6% growth. Yeah, they didn't want to get crazy on the optimism side because the consumer might get uncertain somewhere on this road to the path to the gold mines that we see in the future of this 2.6% growth. But maybe it's out there. It's out there. And the margins are slipping. It's just baffling, and it makes me sad. But ON Holdings was amazing from their underground lair in Switzerland. They kicked ass. That made me feel good about the world, and it's the only stock that is on like a huge screen of mine that I see that is green, for now. So I'm gonna declare victory and go to bed.
Yeah. No, look, it came up to its 200-day moving average right around there. So, if you're looking for something that's on sale, that's on sale and doing well. And we were just talking about that before the show, right? I mean,
Yeah, I
Go
mean,
ahead.
you're not going to get better. This is as good a report as you're going to see from kind of a consumer name, right? They guided 30%, mid 30s is what they see for their top line growth in Q1. So I guess, consumers for $300 track shoes are somehow much less uncertain than Target's customers. But their growth is just insane. 77% apparel growth. They're just crushing. And the stock's expensive, but they're always expensive. It's really hard to find companies in this cyclic growth. These guys are figuring out apparel grew 78% off a pretty low base, but it's still kind of a small company. This is kind of something that I wanted to look at because luxury's gotten so hammered. You want to see if the consumer's gone just completely pear-shaped, and we really are in the disaster shit show recession that it seems to just be kind of accepted conventional wisdom now. It's a company like this isn't going to go 35% growth. It's in a real disaster scenario economy. On's not going to be able to just kind of penetrate little kids' apparel, but they're doing it anyway. So, it's an incremental decent tell for just a formerly hot sector. Nike's had a bid for a month. Just, it couldn't be more of a shit show. But look, people are buying it. Go figure.
But Jeff, that I think that if you think about where some of the stuff we found that's worked in consumer, or at least that I found, and we've been on the same stocks, a few of them, is sometimes when it looks like a shit show. Like, recently my Budweiser's done well last summer. Nike recently's done well. Starbucks, when you were on our podcast and you were pitching last summer, it's like, hey, it's down and out. Well, that's been a monster since they got Nichols. So this goes back to the old adage that you buy stuff that's like out of favor, that's already been derated and the sellers are gone, right? Versus look at this market. The signature, until right now, it feels like it's beginning more broad based. But for the last couple of weeks, this has just been a momentum unwind. All the hottest stocks got completely sold, and all the hot money leaves, right? So I think that's part of it. But anything else? Best Buy? Anything at Best Buy?
No, just waiting. They're going to surprise. I was in Target's electronics section a couple of weeks ago, and just thinking, do these guys really need to sell televisions? Why are they even doing this business? I don't. I think Best Buy is going to pick up huge share whenever people finally buy TVs again. But what are they going to do? They can't push that product cycle forward. They said computers were pretty good. They guided to mediocre comps, which for them is kind of a victory. But they're like a more genial version of restoration hardware. It's going to be hard for them to really pick up much steam until their end shopper picks up steam, and that doesn't seem to be happening. But I'd love to see. Their Corey Berry's amazing, and I think that company, again, we've talked about it before. It's a big basing stock. It's kind of no one expected anything great. They didn't get anything great, but that's fine because they didn't miss and they didn't have to justify kind of an on holdings type of multiple. They're just sort of plugging away and making themselves a better company and waiting for the consumer to come back. And that's kind of a plan, as opposed to whatever the hell Target's doing. Everything comes back to Target, Ben.
It's always about Target.
Just Jeff, my TV died. I just bought a new TV from Costco. So.
And you just walked in, though, right? It was one of those low margin jobs where, there's two kinds of TVs. There's a TV you put in your living room, the TV they put in your office or kind of wherever the hell, your gym, those type of things. Yeah, that's kind of as high as the ambition should be.
Yeah, it'll probably die in 5 years and I'll buy another one. But it was, walked in, got it, brought it home, put it in, done.
There you go.
I mean, I think that kind of sums it up. I think it's, when we think about these consumer names, it's like you probably want to own the ones that either have no expectations and they're good brands that just kind of lost their way, or they're kicking ass, like Jeff said, with a young brand like ONON or whatever. And, Target might fit that role eventually, but, it seems like it's still a little early for that, basically.
You need a plan. You need a narrative for that's Starbucks has gotten really far, and I'll tell you why. I've written about it elsewhere. Because you got to see he was smart enough to boil it down to measurables. He's just coming in there and saying, what we should do is just serve people coffee in 4 minutes. And he just keeps repeating 4 minutes like he's Rain Man. The entire freaking chain now knows that that's your goal. That's a really good goal for Starbucks to have. And it seems super obvious that they should have been kind of pushing towards that anyway. boy, our customers hate waiting. We should make service with a smile and a friendly grin an important thing. It's like, no, how about we measure the time it takes to get them a goddamn cup of coffee? You can get pretty far on that if you don't have earnings estimates to beat and you're openly striving to make something that's obviously broken just a better experience. Starbucks is it makes it almost impervious to what happens next quarter. They've got every headwind in the world. China's a shit show for them. Tariff, oh my god, it's a lot of coffee beans, but stock is just sort of looks like it's headed back to a new all-time high.
Yeah. All right. Well, sorry, Jeff, about your favorite company in the world, your hometown company.
That I have no position in. It certainly is. Yeah. It's just it's a nostalgia pain.
It's dear to your heart. It's dear to your heart.
Yeah,
it's dear to your heart.
It is. Sorry, Dad.
All right. Bob, first, just tell me, am I buying C&Q here? It's at $25. Is this the day the tariffs are in? There's no more uncertainty. Now the only uncertainty is maybe basically the tariffs get pulled off at this point, right?
Right. And the other chatter out there is OPEC putting a little bit more oil into the market at the end of this month, which we knew was coming. They delayed that twice. They were supposed to originally add those barrels back to the market at the end of the third quarter last year. Oil prices are weak, similar to where they are today. So they push it out 3 months to the end of December. Then again, oil prices were below 70. They push it out to the end of March. Now, are they going to push it out again? Probably not. I think Trump would pressure them heavily to not delay that increase in production again, given how he wants energy prices down. And so, I mean, I think that's just jumped in as part of the narrative is people are looking for reasons why oil prices are down here around $67 a barrel. And so energy has been taken to the woodshed. And you see that both, even though oil's down around 67 here, natural gas is holding in very strong. So two things. One, on the natural gas names, I said last week I was buying a little bit more Expand. I had to order in at 98, and now we're down here closer to 97. I bought a little bit at 97 this morning, and I'm looking to continue to build that position. EQT, I didn't step in on more of that yet, but I'm watching that very closely to add to some position here. I think 45 is the support on EQT, but those are my two favorite gas names. They're nearly 100% natural gas. And so they should be agnostic with regard to the oil price. And again, natural gas prices are up 8% this morning. So they're sort of bucking the trend against oil. So if you're going to buy anything today in energy, yeah, I'd buy Expand and EQT, but I'm also buying C&Q. C&Q we've loved all along. The dividend yield here is almost 6% now. And I see technical support at around $25 a share. Now, last week, kudos to Bates. He came in on the technical analysis when this thing was trading at just under 30 and said, look, if it weakens, the next technical stop is 26.84, and that's what we hit yesterday. So he was dead on with his technical analysis there. Now I think the next support level is 25. But they're going to report Thursday. They're going to increase the dividend this year. I give it 50-50 odds they increase it Thursday when they report. If not this quarter, they'll probably increase it next quarter. They last increased it third quarter of last year, but they increase the dividend every year. That dividend is very safe in my opinion. Even if oil, like it did, 5-6 years ago, goes to $20 a barrel, they increase the dividend. So to your question, am I buying C&Q here? Yes. And again, it could go to 25. That's the technical support level. But these levels, am I getting to dick around between 50 cents, between 25 and 25.50 to begin buying or adding to my position? No. The other name I point out here too is EOG, which reported last week and was a disappointment strictly on the fact that cash flow wasn't as strongly this year as people had forecast. And it was really due to a couple things. One, they ran out of their ATMs on taxes, so they're paying cash taxes now, and they're putting a little bit more money into infrastructure and things like that. So people were, fundamentally it was fine, but people were just a little disappointed in their projections on cash flow. That's another name that's a strong name with a strong dividend I'd be looking at. It's an oilier name behind C&Q to pick up here. At these levels, it's at 118, supports down here, technically around 115. So again, those are two names I'd be keeping an eye on the oilier side. But we'll watch oil here. Could it get weaker? Sure. We got to see how these tariffs play out. 10% tariff on crude oil imports from Canada, probably impacting C&Q more than other names. And with OPEC putting those incremental barrels back into the market at the end of this month, most likely, oil could weaken a little bit further here. So we'll keep an eye on these names, but I think right now investors are skittish with all that and stepping up aggressively. But again, I'd be looking on any weakness here and expand and EQT to buy those gas names. I'd be buying C&Q here, just given that dividend yield and that's safe. And the EOGs and the other name I'd be looking at on any weakness here further in it.
All right, good. So basically, it's been a rough run for the C&Q, and you've now gotten hit in both sides. But it's still a world-class company, and you like the dividend. People still need energy, and so I think. And one thing I would just say about the tariffs is that the order of operations will be that stuff like energy, stuff that people need, that's getting passed on. That's going up. The stuff that's gonna not basically have a bid will be the discretionary stuff. The stuff like, and so I texted Jeff yesterday. Here's my basket of shit that I want to short in consumer, and it was like Polaris, Restoration Hardware, Dick's, and it was a basket. It wasn't anything about any specific one. It was just like they had checked a bunch of boxes, and these are the things that can get kicked out of a basket if we're having tariffs, and then by the way, people are losing their jobs and we're in a recession. So I think it's a mixed shift on the tariff thing where some you have to eat it on some stuff and other stuff it goes down. And I will say is that the food prices have come down. This export tax on the farmers combined with China, who's a big buyer. You've seen corn prices drop hard. You've seen soybean prices drop hard. Orange juice prices drop hard. And, that filters through. So, that's a little relief there. You're going to get hit in some other stuff. It's going to be choppy, though. You got to come see us and hang with us because this is not for the faint of heart market right now. This is the opposite.
It's a kick in the balls for everybody. It's like, are the tariffs really going to happen? I mean, I was flashing back to like 2018. If you remember December of 2018, where, the same president then as now, and just random tariff announcements just all the time. Just, I'm a tariff man. I want to do that. That sent freaking the S&P down 9% December of 2018. Merry Christmas, and it's not really, you can't really make heads or tails of it, but on the margins, again, it comes down to freaking what's the story you're going to tell and how bullish can you really be on something like consumer discretionary. Clearly that's going to be paid by somebody. Clearly it's adding friction to the gears, and it makes just the premiums that you're willing to pay for these companies go down.
Yeah. So I think that's it. I just think it's like, don't get too nervous. Don't get too, like today, like clearly now everybody's taking it seriously, right? But let's just be clear. This year we've had a lot of warning signs. We were going sideways. Markets either go up or they go down. Sideways is just guys selling and not letting it go down yet before it goes down, usually. And that's how tops kind of look. And we had the deep seek, and we've had the tariffs, and we've had Trump, basically not giving a damn about the stock market, which is a big difference versus the first term. And so I just think, be careful. We've had a really good run. This has been a really, really good run since the fall of 2023. Okay, we were sitting there. I remember Amazon's earnings, and the S&P was at 4,200, and everyone was like, "Oh," and Amazon beat. They crushed numbers, and then that was the bottom. And then Janet bought the bills, and then we went 4,200 to 6,200 in 18 months. Let's just be clear. That's a enormous move. So we give some of that back. It's not the end of the world, guys. But be looking for what you want to buy. This C&Q does sound interesting to me at Bob's. He's loved it for a while. These macro factors are out of Bob's control. He can't decide tariffs. He can't decide, Trump's going to go tell OPEC to pump a bunch of oil, but it's still good business. Jeff's telling you what's a good business, what's kicking ass in the on, what's not in his favorite heartwarming company Target. but that's what it is. Like the macro is going to be what it's going to be. But the way you can differentiate and get some buys is looking at what is doing well and what's getting thrown out with everything else. So as the resident
you really learn, the point of ranting about Target is both because I need the escape, and I don't want to waste good therapist money talking about Target. I've got other problems, but also this is kind of a really good example of the kind of traps that you want to avoid in a market like this where the direction is just kind of down to skeptical on any given day. you got to be careful about, oh, Target's trading at 14 times earnings. This is a great buy. This is going to be terrific. And then you get on there and it's just Eeyore from freaking Winnie the Pooh, just whining and kind of, they don't have a plan and they don't have a way of dealing with tariffs and they don't have a way of dealing with a flaky consumer. It's you can't be long a portfolio of those. You can't be long. You do the same thing with Abercrombie, which has different problems. Their numbers are going to be amazing, but they're not going to get better than amazing. And people are just going to bet on regression to the mean. And that stock has been just a dead weight. It's down 50%. It doesn't get a bid ever. Don't fight that. Just chill. Just go away. No one liked Abercrombie more than me. I'm not in Abercrombie because it's not a suicide pact. It was a trade.
Yeah, I'm with you on that. I just think that that's a great example of like, don't get too attached to your things. The one thing that is tricky, I guess, is a lot of people are tax sensitive, right? And so I just had a conversation with one of my good friends who's not in the markets, and I had told him that I was like, look, man, I think the market's going to take a dump here. And this is, a little while ago, as I've told pretty much everybody that knows me. And people are like, well, I got to pay 20% taxes. So in some senses, you need to like expect it to go down more than 20% for that. So it's very tricky for a lot of people. And so rightfully so, it's just a difficult thing. And so, just keep in mind that it's not the easiest thing to do. And sometimes things go down and, just be careful and look for the good things that you can find and come visit us and we'll help you. There's always going to be stocks to buy and there's always going to be stocks to sell. So we'll guide you through the chaos. I'm Benjamin Brey. This is Bob Morris, Jeff Macke. Come visit us at Wall Street Beats. Enjoy Trump Tuesday.
Everybody.